You're tuned in to Agriculture Today, and we start our Friday show with the grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, as we look at the grain market, what are we seeing in futures?
Well, the markets aren't really valuing any major crop risks at this time. It seems that we're assuming basically what USDA NAS does when they come out with their reports. By the way, they'll have one on Monday that we're going to talk about in a little bit. The that crop conditions will be normal from here on out. That there'll be no problems. That we'll have great yields and as such. So with that, we've seen on yesterday on Thursday, again, May the 8th, that the July contract closed at 447 and a half, down 1 3/4. D's 438 and 3/4, down about three. And again, these have trended lower when you see that the July contract broke below about 450. Here here for the last few days, and they had been there at that level a couple times in the last well, since basically February. Broke below that again, closed at it broke down to about 441, 442, came back up to 447 and a quarter. And that's just really just the mode that we're in, that relative strength in indice, kind of an indicator of momentum in the market, down to about 25. So indicating that, yeah, we're trading negatively, and really no worries about planting issues, although there's some planting issues in the Eastern Corn Belt right now. But the market's kind of sloughing all of that off and saying, well, I don't see anything on the horizon. So with that, we're just gonna move lower. I heard it called a sell-off in some commentary. And for soybean futures, again, a little bit more strength in soybeans. Closed on Thursday at 1036 and 3/4. Have been trading in a range of about 1025 to about 1060, 1065 thereabouts. So trading within that, showing a little bit more strength than for corn. And the RSI, the relative strength index, is right dead on 50. So more of a neutral situation for soybean futures. And for wheat futures, really falling into weakness again. Kind of ignoring some news coming from overseas, from China on the one hand, of potential dry conditions, other issues happening in Russia. Just mainly paying attention to what's happening in the U.S. Western Corn Belt for hard red in particular, and closed on Thursday at 524 and 3/4. And again, the relative strength index just hovering about 25, just showing a lot of weakness right now. And again, still risk in all of these markets, but nothing caught the attention or I guess the intense scrutiny of the market to the degree of these markets, to the degree that we've actually seen much strength show up in them.
Are we seeing that same weakness when we look at the cash market?
Cash markets, in particular, I think we have the most concern with wheat harvest. Not that far away. Here we are on May the 9th as we talk, and harvest in a lot of areas beginning in mid late June, so not 30 some days away. And you see cash prices in the Colby area at 445, 460 in the Garden City area, and those are the highest prices recorded. You see a pretty uniform, well, 460 in southeast Kansas around Pittsburgh, then a pretty uniform $5.04 high in Salina, Topeka, Hutchinson areas. So not much, not much positive going on there. And would see in the corn market, still the bellwether market for the state, Garden City, again, demand center, et cetera, showing even basis. And historically, in the last several years, we've seen anything from 10 to 40 over to $2 over. Well, now that there's enough weakness in the expectations in the cash market that we're just even $4.47 cent cash price. And the next highest price in the state, 422 in Topeka, 417 Hutchinson, 418 Pittsburgh, 417 Colby, and Salina, 407. Grain sorghum prices all uniformly below $4. ranging from about 357 up to about 367. Again, waiting for moves to help on the export side. Soybean prices would still have some strength in the peak area, 1035, which is really stands out. Everything else is either 995 at say Hutchinson, Pittsburgh, 975 Salina, 935, 965 in Colby and Garden City. So a lot of weakness therein. Even with all of that, still we continue to have really strong U.S. corn exports. Perhaps the low price is helping. Well, of course the low price is helping, and soybean soybean exports have been holding up pretty decent. Showed a bit of weakness here of late. The South American harvest really coming on and availability for export, and hard red winter wheat exports. 4.6 million bushels historic last year. That's not a bad time frame, but that's not a bad pace. However, the with the report coming up, supply demand balance sheet reports coming in. Only about 4 weeks left in that marketing year for wheat. We're behind pace. We're probably signaling that the USDA either in this May 12th report or the one in June will end up in lower U.S. wheat exports because of the pace of what we're seeing for hard red and wheat overall, and give a signal that we'll probably have higher ending stocks. So just the reality of where we're at right now in these markets.
What are some numbers you're seeing for those pre-report estimates for the report that's coming out Monday, May 12th?
Well, the corn numbers, I'd be really surprised if we had anything other than 15.5, 15.6, 15.7 billion bushels of U.S. corn production, 181.1 bushels per acre, and that basically matches the USDA's earlier projection. It just is where it's at, and I have questions about whether we'll attain that. That's a record by a bushel or more, but that's what the USDA does before we get into August, September. They just use trend line yields unless we run into an absolute drought or flood or something that would just indicate that, hey, we're not going to be anywhere near that trend. So 15.7, 15.8 is the projection for the coming year with a little bit higher corn, well, with higher corn acres. For on the soybean side, 52.5 bushels per acre. The market's has the idea that the USDA will stay with that earlier projection. Again, that's about we have never been over 52, 51.7, 51.9 earlier in the past, but they'll stay with USDA's trend. And so 4.338 is the average guesstimate. So, and of course, what we're looking at then would be also for wheat production. There's a projection for all wheat, 1.885 billion bushels. We were at 1.97 billion last year, so that would be down some. In the winter wheat, 1.325 projection, we were at 1.35 in essence last year, and for hard red, 748 million bushels ending stocks projected. We were at 770 last year. Of course, a big issue happening in next week is the Kansas Wheat Tour. So we'll have we've already got numbers out for what's expected in Oklahoma. We'll have a broader set of numbers around the Midwest, and we'll inform that hard red number all that much more. So we'll be watching that. Finally, the ending stocks figures. The USDA in the August report for the current marketing year, 24-25 marketing year, that'll end May 31. USDA projected wheat at 846 million bushels in the April report. About the same thing, a little bit higher in the May report coming up. Projecting about a 25 million bushel decrease in corn ending stocks down to 1.443. So we'll see about that. And for the current marketing year ending August 31st, and then for soybeans, 369 is a projection. That's down about 6 from where we were at. So what's that mean? Not a lot of change projected for the old crop marketing year, and really the new crop marketing year is right now almost completely dependent on what we actually get for crop harvest. So we'll be watching that. There are some pre-report estimates out also for Argentina and Brazil for their crop sizes, but really nothing of major substance there, except perhaps a little bit higher corn production than if in the May report that had been looked at in April. So, um, pardon me, we'll see how that report comes out. And as you and I have talked about before, that when there's expectations of almost nothing happening, then hey, when something does happen, then you can bring about volatility. So we'll see.
Dan, is there anything on trade that you're really keeping an eye on?
Yeah, of course. The U.S. and China have ongoing discussions, and I think we can politely say it's hardball tariff back and forth discussions. Sounds like there will be talks between the U.S. and China. This happens at the same time that China has sent out reports. We've got ag news reports coming out that they're concerned enough about serious drought in their country that they're looking at ways to protect what wheat production that they do have. And no doubt, if it's wheat's affected, other crops also in some of these same areas be affected. Depends on where they're at in the growing season. But right now, the issue is on wheat, and China has not been buying much wheat uh, from uh, uh, from the U.S. of late, just because of these trade tensions. But even if they go elsewhere and start buying wheat, still you affect the flow of wheat. And if they go in and they buy strong from the EU or wherever, then the others that were buying from the EU would come to the United States. So we'll see it. I think that uh, China is the world's number one wheat producer, number one world wheat user, and if they have a shortfall like is feared, then it'll affect things and very likely impact U.S. wheat exports, especially hard red, in a positive way, and we'll see where that goes in the future.
Dan, I appreciate you taking the time to join us today.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.